Okay, today we're looking at dollar yen spot. The synodic time by synodic degrees, you can see from the start date back in April 1990, you have a whole series of turns, lows, highs, high, high, low, and a low. And these aren't just any turns, these are very important turns on a long-term chart. So I'm saying you may not understand everything about this particular application, time by synodic degrees, but it's something to pay attention to. Um, I don't care why it works. I'm just saying that there is a relationship between the outer planets, and it seems to catch a lot of turns. Now, if we look at Pluto, it could go down here into the 90-week cycle. You know, dollar yen could get down to 110 area. It doesn't have to, but that is a possibility. What I think is important here is that Pluto gave us the low back at 100 to 101 area. And I think that sets up this rally. You can also see the 50% retracement gave us the low back at 100. So that was an important indication that you're going to get a big rally. And you bounced off of this weekly the upper band of the weekly cloud, which sets up the rally. So I like it. It often happens that you break out above the weekly cloud, you come back, touch it once, and then you go. That's a great setup. And you bounced off the 3/8 retracement. Again, that's a good reason to expect a rally. Again, this is the 3/8 retracement. Now we're targeting on the square of 9 intervals March 24th, which is close to the spring equinox. So if we do start to rally, maybe there will be a top here in late March. Again, the timeline indicates a turn here now. So that sets up a rally. And on this square of the high, it's indicating a turn here. You have the completion of the square halfway through the second square in time, and you have these two Gann lines offering support. It sets up a rally for dollar yen. Also 90 weeks from high to low, and Pluto trine Mars. It's happening the third week of February. So it's not just one thing, it's a whole range of things pointing to a turn here. And again, you have the square of 9 intervals pointing February 18th. It's likely that you'll trade sideways for another week or two, and then by the 18th of February, I would expect dollar yen to start moving up. Again, 225-degree line on the static square of 9 should be pretty good support at 111. And again, the 90-week cycle sets up a change in trend from the third week of February. How high will you go? You could go to 142. That's an upside objective on the square of 9, measuring degrees up from the low. 360 degrees, it's a good target. Or you could go even higher. 146 would be a target using 7 times the base. That's a major upside target. In that same area, you've got the former high at 147. That's a good target. And 147 is also a 200% projection using Fibonacci expansion. So looking at this first leg up and then down, 200% move of that first leg takes you to 147. Those are a couple of targets to keep in mind. Just be ready for a change in trend from the third week of February. And I do believe the yen will start to weaken at that time. You get above 114, 116 area, and you're on your way to 124, 127 area. And from there to 142, 146, and 147.